Hello, guys. Welcome to another episode of Backtesting and Chill. My name is Christopher, and my friend is Matt.
Yes,
He's
sir.
the main trader, the one taking the wheel today, as usual. I just woke up, so I don't want to make any mistakes. So you're going to take it, my man.
Sounds good. Yeah, let's go back into where we were at before. I think we were on Euro USD and testing that. So let's just jump right in again, and there we are. Here it is. Our account balance is 102,332, so we are up about 2 and a bit percent.
2.3.
Yeah, 2.3. So let's get it rocking. Let's go from top down.
Yes.
Okay. So again, just like before, what we were saying was that we were really bearish on the monthly. You could see that right there, right? That little gap. We respect it. We break back down. So to me, the next level is just down into here on the monthly.
Yes, and even into the Pearl Valley got a little bit.
Yeah, exactly, over here. Agreed.
That looks really clean.
Yeah, and like, again, just going back on from what we talked about before, internal to external, right? Where you have this down move, you have internal to external to internal to external. So that's just the next clean move. So, it's very clear on the monthly.
Yeah, I really like it.
One thing that we do have to note, though, is the fact that we already did take out 2 monthly lows, and we're getting a little bit of a reaction out of it. So just good to be aware of that.
Yes. And also, what day of the month is it?
Exactly. Good call. We're about halfway through the month, I believe.
Yeah.
We'll check on the daily, but yeah, definitely looking like we're going to come back down some more. I don't know why why I deleted this. Oh, it's probably on it. Yeah, that's why. Okay, so let's go to the weekly. Yeah, this is beautiful. I think last time, or we traded this week, I can't remember.
All right.
Yeah, this week actually, and we targeted these lows down into this wick here, but definitely looking like it's going to continue down. On the weekly, though, we do have to be aware that it could pop back up into here,
Which can be a great area.
Yeah,
You write it down.
exactly. Because yeah, right here we took out all these lows and we failed to break below. Right, we took out 1 low, 2 low, 3 low. This is all the 2 monthly lows here as well. So maybe this is going to start, like, to me it looks more like this week we're probably going to start down. Maybe I would mark out 50% of this wick as well, because it might come back down into there and start gravitating towards up into here. And again, if we use our same logic where we have internal to external to internal to external, something like that. So let's just see how that goes there. Yeah, look at, right, these lows we hit, we're failing to break back below them, closing back up. So yeah, I wouldn't be surprised if we see it fade back down and then back up into this level up here to take out this high.
I'm a little curious on if we're respecting the 50% of the order blocking left, then exactly that one.
Let's see. Yeah, we definitely are. If I use the wicks, you could see the 50% is literally right here, respecting that. It did close through it a little bit, but
A little bit.
but yeah,
Came back up immediately.
exactly. It came back up immediately. So I'm assuming that this is going to, this little high right here, the swing high is going to be the draw. That's what I would anticipate. I mean, it's looking like it. Again, we have to realize that the monthly is clearly down to take out this low, and there are equal lows here. So I am aware of that. If we do get a sell, like say for example, it comes and takes out these daily highs and then fails and shows sells, like I'm definitely going to be interested in the sells more. But it's looking like that's going to be the draw. So 4 hour, very, very clear, rejections too. And you can actually see we got the 1, 2, 3 runs to the downside. So would not be surprised to see this pop back up like that. It does look like it. And anything else really that's here? We didn't really break anything. We do have a 4 hour fair value gap right here that's being respected so far. Like so. But yeah, I would like to see it close back above, retest it, and then go up into this high. But you can see here these equal lows here swept by this one candle, that's a potential order block here. Considering our analysis is pointing more towards the upside, so wouldn't be surprised to see this get some reaction here, or again down to that 50% into that wick, but still within this order block. So let's just see. Let's go down to the 1 hour. You can see, yep, look at that last sequence of down candles, purging a low, fair value gap in between. This is a high probability order block in my opinion. Plus, to take out this high, we'll say, we'll just mark it off, because that'll be like a little short-term target to get up into here. Because what could happen is something like this, is it comes back down to here, hits this high, uses this as that liquidity, that buy side liquidity to fill up the orders and start continuing down like that. All right, so
right?
Yeah, I think that's pretty good for the higher time frame and kind of where we're going here. So let's just say green for the intraday, and yeah, let's go to our New York session.
Yes.
Yeah. See, so there we go. New York session was hit here on Monday, and you can see it just immediately started off in that gap, breaks back up. Look at how it respects this right here, right? It respects it. Comes back down, but then uses the down candles as an order block right here. So it's just respecting, and you can say the exact same thing right here. Okay, order block right here, last sequence of down candles, and now that we came up and use this as a support, that gap that I pointed out there, I'd be more inclined to see this going up to take out this high now. I don't see any reason why it's going to stop,
especially on a Monday.
Especially on a Monday. So I think that, that this is starting off on a Monday perfectly, because if I just go to the session here, so this is the open of the new week, right? So new week, if we're bearish on this new week and it's starting off on Monday to take this high out, well, guess what? I'm looking for rest of the week down after that. So I think that this is perfect to ride this up into this high at least. Okay, so that's what we could be looking for. Let's go in the 15-minute. 1 hour was just super clean there. It has the one fair value gap, so I like the 1 hour the best. And yeah, we're going to be looking at that to this level, and that's probably like a 20 pip range. I could that. I could wait on the 5-minute for some order flow. So let's do that. Actually, I should turn on my
session indicator.
My session, exactly. So here we go. So you can see that it started there at 7, and we're good to go. So again, coming right back down, this is exactly what we want to see in New York session, like coming right back down straight into that fair value gap to start it off right before that 8:30 timing. And so then we just want to, see a continuation up to that high, really. I'd like to see, now it depends. Let's see, we have this whole leg here, right, that it could come back down into. I don't think it will because of the fair value gap on the 1 hour, but we could just wick back below this level. Let's see. We could start tracking the fair value gaps on the sell side. We want to see those break. See, so this one held. We could track that down here. This one broke right through, but closed right back within. There we go. So now we get back into that level. That's our 1 hour order block, our 1 hour fair value gap. Okay. So this one is where I would really like to see it, because we have some traffic right here as well. See this last sequence of down candles right here, boom, that's traffic. So if we start to hit this level, we break back up like that, that's a good bomb, in my opinion. And I think minimum we could target this high. Fair, Chris?
Yes, fair. I just would like to see the 15-minute.
Yeah, let's reassess here from where we're at. So we, on the hourly, it is 10:09. So the start of the new hour is right here. So the start of that new hour immediately goes down into our key level, right? So that's really, really good to start off the hour. That's exactly what we're wanting, because that's going to look like this, right? Start of the hour, whips down to create that wick, breaks back up to create that high, closes out like that. That's our bullish candle on the 1 hour, and it hit our 1 hour key level. So really, really good way to start this 10 a.m.
Yeah, this price action is really clear as it's been respecting the fair value gaps.
Exactly.
Really, everyone.
Yep. Agreed. No, it's really beautiful. The way that it's supporting now is really nice. I really like this last sequence of down candles. This candle right here, came in and allowed for mitigation of this fair value gap here as well, right? So it wicked back down into it, mitigated out of it, rallied back up. So it's coming right back down into the retest here. So again, it's looking really, really good for me. I would just wait for probably a shift through this fair value gap, and then we're good to go. See, so that was the last fair value gap. Just going straight down. So it is going down further. So let's look at that 1 hour. Yeah. See, I would have.
No, sorry. Go ahead. I was just going to say that we still have that fair value gap and that rejection block. And
exactly.
Potentially fail. Hold. Sorry.
Yep. And if you actually look at the only thing is, I was just going to say we came back up into a little tiny gap up here. I think it's the week. Yeah. So that's the most extreme point. We took out this high. Now, I really wanted to see that hold, to be honest. I wanted to see this fair value gap hold as opposed to just slide through it inefficiently, because now it slid through this one here, right? And it slid through this one right here as well. So part of me is a little concerned that now this is probably just going to retest up here and come and take out this low. I didn't want to see that. I didn't want to see it slide through that. I wanted to see it hold there, respect, and then continue up. But the fact that we slid through it is making me a little bit more bearish. And again, that's with our higher time frame buys, right? The monthly. But anyways, go ahead, Chris. Sorry.
No. Don't worry. This is one of those scenarios where we have conflicting bias, the two of us, and I do agree with you, as I can see the other possibility playing on too. So I would just wait right now.
Yeah.
For pricing develop.
Yeah.
But I do agree on your view.
Yeah, watch. Like this is what I'm anticipating right from here. Again, I'm not going to take any execute any trades on this because it just doesn't make sense. But this fair value gap is matching up with the one that just got slid through. Wouldn't be surprised if it comes back up into this high, comes back to take out this low. Let's see. See, it actually just broke through it. But there we go. Now it's going to go. And it's already 1 p.m., so I'm not interested in anything right from here. So it ended up just not, supporting it, breaking back down, coming back up. So nothing of interest. But yeah, it is currently 1 p.m. So nothing there for us. We could review this session, what ended up happening, right? We went to external liquidity here, right? We go up, down, external, internal, external. So from this point right here, is that the next move is back into the range. I thought it was going to come back into here and then go up. In fact, or what it ended up happening was it just ran down into the low, into the last point of interest right here. So nothing much for me regarding actual trades. I would have liked that continuation, but is what it is. It looks like it could go from here, but again, it's really late into the session, and so you can see it just allowed for mitigation of that fair value gap.
There is still a big chance of Tuesday playing on. So
exactly. Yeah, let's just fast forward to New York. Yeah, see, so it just failed right here, broke back down to take out that low, because that's the thing. Like once it slides through key levels like that, like where was it on the 4 hour? No, it was on the 1. Like, look, see this old fair value gap? Look where it gets up to. Look, that one is like the one that probably should have held. The fact that we slid through that and then slid through this one as well is like, okay, well, now it's gonna need to go pick up some liquidity, which it did, right? Picks up that liquidity, then jets back up into that level, allows for traders to mitigate out of their longs there, right? Because there were people that were long, institutions that were long there to continue back up. And so this allows for that mitigation, and then boom, that's where you get that really, really substantial move. So super interesting how that played out there. Let's just do.
It used previous highs as an inducement.
Exactly. Yep. It used
really clean from the hourly.
Yep. Yeah, it's just, again, when we were thinking for upside, we thought it was going to hold this fair value gap and get up to this high because this is a higher time frame fair value gap. And the fact that it closed back above this 4 hour is like a good sign that it's going to continue up, right? And it still could, right? It still could just now that use this 4 hour order block and then go back up to here. So we might not have been wrong. It just might have been the wrong timing, right? And so we look at what's to come. We have FOMC on Wednesday. So again, the big move is going to come from Wednesday. So just keep that in mind. But yeah, we have that 4 hour breaking back down. In my opinion, there's two kind of scenarios I see. In the bullish scenario, I'm seeing we have this fair value gap, that 1 hour order block, and we are going to target up to this high. Alternatively, I see that we swept some liquidity up here. Okay, swept some liquidity up here. Last up candle right up here. And so I can see this fading back up into this leg and then breaking back down to come back lower. Those are the two scenarios. Anything you see, Chris?
Well, I mean, like it should be
okay. Sweet. So yeah, these are the types of scenarios that, you know, it's difficult to trade, like, or you typically don't want to, you know. It's more like you want to give yourself a bigger range or something that's very, very clear, like, because you could forecast and say, hey, you know, I think it's going down, but if there's a buy opportunity, it could also be going up. And so you really have to stay patient to where it's just a 90-10 opportunity, where it's just one-sided. It's very, very clear that it's going in one direction, you know. But anyways, let's see how the day starts off here. You could see that we got to 8 a.m. So let's see what the 8 a.m. looks like. So immediately we have some equal lows here coming right back up into this up candle. So I'm more assuming now that it's going to be downside. Just because the first move was straight up.
straight up.
So little take out this high. Let's see what happens here. No, see, so it just went straight up. So it did end up supporting that 1 hour order block. We get completely through this fair value gap here. So now let's see if this high is going to be the one that gets targeted now. And again, up into that major high there. Yeah, so that was the case. So yeah, again, I wouldn't want to short here because of the two potentials that we're stuck in a higher time frame level and then this shorter time frame level. If I'm looking to go long, then what I would do is I would wait for this to break like we did, get the retracement back down into it, and then go long. We didn't get that. It just went straight up, and then it used this little order block here as the fuel to push it up. So all good. Again, there's just nothing there that I would have been interested in entering on. But overall, the idea was really, really nice. You know, like it respected the 1 hour level and started rallying. So let's see what happens now.
The big picture read was good.
Yeah,
but it's one of those scenarios where you're just like,
yeah,
it can happen either way.
Exactly. And it's just, you don't, like, for me, again, like I said, I don't execute on these ones, the ones that I'm like, oh, well, I see a bear scenario and there's a bullish scenario. Now, the difference is that if there's a bullish and bear scenario, but there's like, I don't know, 20, 30, 40 pip range that I can manage within, then okay, great. Then I'll take it. But if there's like 10 pips or less of a range to work with, then it makes it difficult, right? It makes it difficult. But yeah, anyways, that's where we're going, looking at this high. And again, this is the weekly fair value gap. So any shorts really from this level could be really, really nice. So let's just keep an eye on that and see where we go from there. Let's see, what is this? 1045. So yeah, this is going to be, what's it called? So we just took it out a little bit, nothing too much. You can see another fair value gap here with traffic. So I'm assuming that this is going to launch back up. Let's see. There you go. There you go. Nice inefficient run right from this fair value gap. So that's beautiful. Now, this is where, I mean, if I'm shorting on the weekly, right? So the weekly did exactly what we said, right? We failed to break lower, so therefore this high is the target, and we have this fair value gap here to target as well. And you can see, look at last sequence of up candles, purge liquidity right here. there's a potential reaction point right there at basically 131 or 113,600s. So let's keep an eye on that one too. On the weekly, that's a weekly level there. You can see even on the daily perspective, I can get rid of this. On the daily perspective, there's a fair value gap right here as well to look at. There's also this breaker block right here. Okay. So really interesting level here for shorts. I'd also want to see though, from this high to this low, where's the 50%? See, so 50% actually premium is right here. And there's another fair value gap, that daily one right here. So might have to, yeah, it's definitely a strong area. Might have to pump up a little bit more before we get the actual sells. But yeah, I would say the sells are going to come up in and around this level. So right now it's already 12. So let's just go to the next session. You cool with that? Yeah. So again, we started off this session, and again, this is FOMC day. So this is like that's when the volatility is going to get injected to the market at 2 p.m. So I'm assuming that we're going to come back up into this level and then down. FOMC is going to be the big rip down. But again, would be a no trade day for me personally, just because, again, I don't want to trade in front of a big news event like that. But I would assume that, yeah, this old fair value gap that held once and that's holding again, that we took out the previous or the current daily low here and respected it. It's the same thing that happened on the weekly, remember? Where if we look at the weekly, where we had this low, sweep below these lows, close back above. This is the high that got taken out on this candle, right? So same thing on the hourly here, where this swept below these lows. This is the high that's likely to get taken out, right? So yeah, let's see if it's going to come back up like that. That's what I would assume. But again, it is FOMC, so stranger things have happened if it doesn't work out. But here's the fair value gap and order block right here. So this would be the trade like so, up into this high like that. See, so it's this looks really good. It really does. Like FOMC, man. What the hell? Should we just go in like a small position?
Yeah, you can take it just for quick.
Yeah, let's put a small position.
See some action.
Yeah, exactly. Just because I want to get some action going. But let's go 0.5%. And again, if you guys are unaware, we pushed an update to FX Replay, so you can include take profit or stop loss. You can manage it and put it however many pips you want. So let's just round up here. And this is something that I love, like the fact that you could just add the pips now is just so clutch. And so yeah, I would say 12 points or 12 pips as well. You could add auto break even. So let's just say after 1 hour, let's go break even after 1 hour and just show you how it is. And then, yeah, we could tag it, save it as a journal, but we're not going to do any of that as of right now.
Brother, it moved the break even. Wow.
Oh, yeah, good call. I don't know why. I accidentally went down. That's why I scrolled down.
Awesome.
Okay, cool. So now we are in the position. Oh, I accidentally market executed, but that's fine. That's all good there. Let's let this thing go and let's see if we can get a little wish.
Right. Overall is reacting really nice.
Yeah.
I would have liked it to just push after a couple of reactions.
Exactly. Yeah. You see how it's just holding this fair value gap here, the bearish one, and what's it called? Traffic right there. That I don't really like that too much, but all good. Again, that's why we risked a smaller percent on it. There we go. So now we come back up. It barely took this high, but it's more, yeah, let's see. There we go. So after it takes out that high, I would personally just be at break even right here because you see how these last sequence of down candles mitigated out of that or allowed for mitigation out of this fair value gap / order block there. Yeah. Like I would be able to put my stop at break even. So what I'll do is I'll just put it up under here. And that way, once it hits 1 hour, it'll just go straight to break even and then we'll be good to go. But yeah, I'm more inclined to think that we are going to be going up. One of the things that we have to be aware of, let's look at the 15-minute for some extra clarity. Yeah, is this. Because this, we purged some highs here, and we have this order block / fair value gap right up here. right? So again, you would want to be break even here, especially on a day like FOMC.
Sure.
So actually what I do...
If you pay attention to the time, it is also a factor that has to be considered. We just have like 30 minutes left.
Totally. So let's actually close maybe 50% of the position and just lock in some of it, even though it's not a big trade. Again, we're trading FOMC, so we're just, or pre-FOMC, so not try to be too greedy or anything like that. You can see FOMC is up at 2 p.m. So let's see. Watch this reaction here. If it breaks back down, we don't want to be in the trade anyways. So I'm just going to mess with our break even here just because, again, it's all good. We're in that level where it could turn down.
Respecting the FPG and
perfect. All right, so that was a good. It was a good trade, and that's why like it was so clear right here. You know, as you go down, and sometimes it's like, oh man, like it's such a nice trade. I almost have to take that. I'd be crazy if I didn't take it. But aggressively managed for the pre-FOMC trade, and like again, that's it to me. That was a good trade.
Yeah, we don't advise people on trading during news days because it just makes everything low probability. But if you're doing so, at least risk less than you usually do.
Yeah, totally. And like it's not even like we're trading on a news day, but we're not trading the actual news. And I think that that's really an important distinction as well. It's like it's like you could trade pre-news, and actually I do pretty frequently pre-news trading and then post-news trading. Though like post-news is where you get the real move, but like when you know that hey, we're very likely to come out and take out this high. All right, well I could trade into that, and you know I won't risk as much, but it's because it's pre-news, but it's in my opinion highly likely that that's going to happen. So let's just put some risk on, and I think that that's okay.
I do agree. Yeah. I wouldn't advise people.
Exactly.
Please make some experience under your hand, then decide. At the end, it's a decision that you have to do based on your data and your strategy.
Exactly.
I'm just giving my opinion now.
Yep.
All of you.
Absolutely. And so one of the cool things here with FX Replay is that if we don't want to wait and click next, we could just go to, and if you actually go to custom settings and go to news event, we could actually go into the next news event, which is going to be right here. So it'll just fast forward directly to that. And so look at that, right to the FOMC. And so Chris, any bets here? Any bets? What are you thinking first move is going to happen is on release?
First move is going to push probably up a little bit more.
Yeah.
What do you think?
We took it. The hourly high was taken out. I don't know, man. I don't know. I honestly think it could just rinse down right from here, but
it can
because you see how it turtle soup this high already. This right here.
I see it.
So I could see it just like that was it, inducing longs, and then now just slide right through this whole thing. But let's see. I have no idea. So let's see what's going on. One of the things I do like is you see previous day high. We're operating above previous day high. This is a major liquidity pool up here. A lot of orders resting. This is if you're going short, this is exactly where you want to be going short from a high. So
how many pips above the higher hourly?
We are precisely 13 pips. So yeah, between 10 and 20 pips is what you typically want to see on the ending of a buy program. Yeah, exactly. Yep. The high of day. So let's see. Yep. Just immediately rips down into this traffic. And again, the reason being is because we, like for multiple reasons, actually, we took out that daily high by 10 to 20 pips. We got a short-term high here. It goes through it, fails, breaks back down. As soon as that happens, it's like, oh God, okay, there's a potential that this thing could rip. There's also a relatively clean leg here. If I go to the 1 hour, you can see it. Look at that, right? There's no traffic. So it's going to want to seek into that. And then finally, you have the internal to external. So the next move is internal or complete reversal, right? So a lot of confluences there. But let's see. This is the traffic level, so it might respect here and go back up one more time. Let's see. Again, also the midnight open and New York open prices are in around this level. So those are good supports typically. Let's see what happens. Yeah, so just going to break down. Okay, cool. So, I mean, we got what we expected really on this a 30 pip run for FOMC. So that's kind of cool, but nothing that we would trade. So what I would think is that this is the high of the week now, based off of our analysis.
Yep.
So let's clean up and let's go to the next New York session. I have a feeling though, this next New York session is going to it's going to start like down here. Like it's going to just run, it's going to run in London. Let's see. No, it didn't. Okay, thank God. Because that always happens, dude. Like, or at least I find after like a big news event and like you get that manipulation and then you don't get an entry and then it's like the next day you're like, oh, I'll just come for New York. It'll be perfect. And then New York is all like is way, way low. Like it expanded heavy in London.
For people to know, when we were living together, I can't tell you how many times we were so adamant and happy the day before on a setup. We just woke up really early because Costa Rica isn't the best time to trade New York session. You have to get up really, really early and prepare yourself. And it was like, oh man, the trade just happened. 80% of the move has been made. And it was just pain and sadness.
Dude, it honestly is so heartbreaking. Like when you have all your analysis and everything is right, you were patient, you did all the work necessary and you know, you prepared, and then all of a sudden it just rips overnight and you're like, damn, dude, like that's nothing could explain that heartbreak like that. Like, I don't know, man. Only the New York traders will understand that, I think.
It's super painful, correct?
Super painful.
And another thing I can add is the amount of bad decisions you can make afterwards because you're just heartbroken and
absolutely,
and you really wanted to trigger, you know, decision and take something,
and dude, that
ended up being the most painful experience.
That's a great thing to point out because, dude, it is so true. Like, you build up these expectations almost in your mind that you're like, oh man, I'm going to smack this trade and I'm going to make, you know, thousands of dollars, or I'm going to pass this funded account, or I'm going to do this, I'm going to do that. You build it up in your head and you're so confident on the setup to happen. And then you go to the charts that next day and it's gone. And so are all those expectations, all those hopes that you had of passing your account, and they're just gone with the wind. And like, damn, dude, like it's so true. It's those things need to be managed, man. Those expectations need to be managed, and it's really hard sometimes. Like,
it's really hard, and it still is.
It's still.
We are dreamers, and we like to pursue our goals.
Exactly.
And every day counts. And even before, dude, because now majority of the funding companies don't have like a time limit, but when we were doing them, it was just a month, and that setup and your percentage target was so close at the end of the month that you just wanted to risk it all at the end.
Yep.
I don't know.
Totally, Ben. Yeah, that happened 100%. And that's why, like, the funding challenges are like, it was more incentivizing like a gambling style back, you know, way back when it was just the monthly limits, in my opinion, because that's not how you trade, dude. Like, you trade, you grab 1%, 2%, you know, you're happy, you're done, you take your time, you don't rush things. And then all of a sudden you start trading, you know, the funding challenges, and you're like, oh God, I need to enter, like enter everything. You're trying to catch every little move, and then you end up blowing your account, and then you think, oh man, I'm a terrible trader. But it's like, no, you're all good, man. Like, you know what you're doing is just take your time and be patient.
Itchy finger from Monday to Friday, and then just Saturday and Sunday.
Yeah,
really depressive state.
Dude, so funny, man. It's true though. It happens.
I really like to talk about these things because you see in social media just the positive side, and now you can see a few traders that are genuine talking about this.
Yeah,
but I don't think they do it as we're doing it right now, like as honest as we're doing it right now. But I think it's also part of their journey. I know most of them are really good traders right now, and probably if they experienced what we have experienced right now, they would share it.
Yeah, totally, man. And I think it's also just like, I don't know, I get it. Like some people, they have a brand to uphold and they want to look like they very competent in what they're doing. And I understand that. And I understand that that's what you're trying to sell, you know, that you're good at what you do. But at the same time, man, the journey is all the same. People go through it. And it's just really about your mindset to it. Like, how do you interpret losses? Do you associate those losses with your identity? Like, do you identify with those losses, or you're like, oh man, I took a loss, therefore I'm a loser? Like, if that's the case, like that, you're gonna have a really, really hard time trading, because you have to take losses on the chin. You know, you got to just take them and then just keep moving forward. And like, it's funny because some of my biggest trading days, some of my best trading days have been when I took a big loss, or not a big loss, but a couple losses, or a loss right at the beginning of the day. Like, I don't know if you remember this, Chris, but remember I passed the TFF. I can't remember what challenge it was, but I passed it that day, and the day started off on me taking a loss on gold, and it slid through my stop by like 2 or 3 R. And so I was like down on the day, and I was like minus 2 or 3 R. And I had to like stand up, take a walk, and like like get my head straight, and then bouncing back, and then ended up passing it, or passing the verification in that day. And it was not because I was making stupid decisions or anything like that, or forcing things, or over leveraging. It was just, you know, you take it on the chin, you recollect your thoughts. There's opportunities that still need to be taken, and then you go from there, and not allowing yourself to kind of be phased by that. But again, if I identified with those losses and said, oh man, I'm a loser and whatever, then that never would have happened, and you would have missed out on opportunities. So it's super important. Like, yeah, I don't know why I brought that up, but it's just it's how you deal with losses, for sure. I think that's a really important thing. And I understand that, you know, some people that are teaching and stuff like that, they don't really want to show losses, or it's not to their brand to show it. They want to seem confident and stuff, but the reality is everyone loses, and it doesn't matter who you are.
Yes, you brought it up because it's important. We try to be as transparent as possible.
Yeah.
And because it's the things you're going to live. It doesn't matter how good or bad you are, or where you're starting out, you'll live.
Exactly.
And the software can help you avoid a lot of pain.
For sure.
We didn't have it back then when we were doing it. So
for sure. No, that's a huge thing. We just had our recent Profit Playbook guest, which is undisclosed at the moment. I can't say that until that's released. But we were talking, and you know, there was a lot that was brought up regarding that sort of thing. And yeah, man, it's such an interesting journey to be a part of. You know, it really is.
Most challenging and
most rewarding
rewarding thing I have ever done
for fight
for.
For sure. I would agree with that 1,000%.
Wow.
But also,
ongoing.
Yeah, a little rant there, but that's okay. That's, again, man, I think that's, I don't know, like the whole goal of this, you know, of doing this for me is like, again, backtest and chill. It's like, talk about life, enjoy, and have good conversations, and learn to trade, and you know, I don't know. I think that's
not even all the sessions are going to be the best ones.
No, exactly.
How it goes. And as you said, this channel, this content is made for you guys to learn and enjoy, because we're actually, if you pay attention to what we're doing and saying, there's a lot of insight that you can use.
For sure.
And at the same time, you can see the human experience of people that have been doing this for some time now, especially you, that you have done it for quite as long.
Yeah, definitely a long time. And again, there are some really good nuggets that we've been talking about. But yeah, again, regardless, the whole goal is just to have good conversations, listen to some good music, chill out, and just enjoy, man. Enjoy. Life is too short. You know, you got to enjoy.
And for people to know, we're just best buddies, and
Exactly.
and we live apart in other countries, so we enjoy a lot just
just
having each other in this
exactly, brother. Exactly.
content or format, you know.
Totally.
So, what time is it? 9:20.
Yeah, and I was just gonna say that we just slid through a 15-minute gap on the left after taking out this high right here into a larger gap, and I should actually put this one into gray. And so again, assuming that this is the high of the day or high of the week, sorry, and we had that mitigation here, right? Higher time frame point of interest. We took out a hourly high, and I think it's just an hourly high right here, right? And now we're closing back in the range. So I would assume that it's going to go down now.
Can I take a look at the daily, please?
Absolutely. Absolutely, brother. So the daily, we took out a low. We rally back up into 50% of this wick. It seems to be holding as of right now. Again, on the daily, is the daily ready for the expansion? I'm not too sure. Now, this could close as bearish. If this closes bearish, then we have our swing point here, which would indicate to me down. But we would have to wait for a close in order to confirm that. However, we could anticipate the close if we have a really good opportunity, right? And right now, I got to admit, I'm a little bit, what's it called? I'm not too convinced that it's going to go down from here, but I'm also kind of convinced that it's going down from here. So it's a little bit hard because the 1 hour looks very clear to me that, okay, sure, we had this one, it should have went up, and now we take out this high and we're holding this hourly for value gap again. To me, I still think over the higher time frame, or the monthly is down, and it's very, very clearly down. We took out that high. We're in a weekly fair value gap. We hit it already. So, but we are just in this consolidation. So
let's see if we can close or slip through the fair value gap on the hourly.
Which one? This one here?
You see it? Yeah. If I see a candle close,
yeah, let's see what
below that gap, maybe I would be
okay.
Leaning on the bearish side.
Yeah, I agree. Let's wait. All I'm saying is that I wouldn't be surprised if this happens.
Me neither.
Yeah, it does. It honestly doesn't even look like it's going to get back up into that level. But let's see, what time is it? 9:45. Let's just go straight to the next hour. Here we go. So the 1 hour did slip through it, right? We closed all the way back down, right through that level. We have now the last up candle that purged liquidity into this point of interest. This high should be respected. We have an order block on the 1 hour, like so. We have the inversion. We have another order block right here. You can see that, look at this on the 15-minute, that fair value gap held nicely. So let's see. I'm assuming downside. I'm assuming it's going to pop up into here and then come back down.
Same.
There we go. High to low. Are we up at the 50% yet? Not yet. Slid through this. Is it going to sustain? Oh, it's going to sustain. Yeah, it's going to break back down. So to me, this low is going to be targeted now.
What you making?
And we just purged this high right there. Like, again, I was wanting to see it come up a little bit higher, to be honest, because the 50% was right here. So that's why I was waiting for something to come back up into here before looking to take that short. But the fact is we took out that liquidity, came in here, went through this, supported this fair value gap, broke back down. I'm assuming it's just going to go and take up these lows now. I don't see why it wouldn't. And you can actually see a little market maker sell model here, right? You have your smart money reversal, and then here is your accumulation, or sorry, the distribution, and then likely going to get a distribution down into here. Okay, here's your Fair value gap.
Okay, you got me in, G.
Yeah, should we take it?
Yeah. The only thing for you guys to know, it's kind of late in the session, which is
time.
In May.
Yeah, 11. That was actually the 11. Was that the 11 a.m. open that just did that? Yeah, it did. So 11 a.m. open just broke right back down, but it supported. You see, look at that. If we just took it right off of the 1 hour order block right here, we would have been set. And like, honestly, sometimes that's like when you have a sell model on the 1 hour, it's like, who cares? Like, you know, you just enter right off that 1 hour and play the 1 hour, 2 hour. Like,
yeah, we just interviewed one of our friends, Mac, and
exactly
basically that.
Yeah, Mac, we did the Profit Playbook episode with him, and it was essentially that as well. Yeah, it's just sticking to the higher time frame levels, and like, again, you don't have to go down on the 1 minute or 5 minute or whatever to justify or to validate your entry. You could easily get it on the higher time frame. So
find a strategy that match your personality and this tolerance and time and lifestyle, a lot of things, to be honest, and then
you're good.
You're building. But for our personalities, we like little movement during the session.
Definitely. And it's good to just like, I don't know. I enjoy it being in and out in a session or in and out and whatever, and then it's easier for me. Yeah, so let's do that. And if you guys are curious, if you're using Mac, you can use option B while selecting the profit calculator tool there, and it'll set a limit order at that level. So let's go with 1%. I'm pretty confident in this one, and let's let it rock.
Okay.
What time is it?
A little late.
Yeah, it is a little bit late.
Yeah.
It is a bit late. Yeah, I'm going to wait. We'll wait then. I wanted to see it get tagged in and then just drop there, but...
Exactly.
Yeah, let's just see. Anyways, we wouldn't have been tagged in anyways, but directionally on point. So...
And this is what happens after volume
exactly
has left the market.
And dude, this is what I'm saying. I think we talked about it in the last episode as well on Backtest and Chill, where we were just like, dude, like, it's not even worth trading afterwards because this is the type of stuff that happens, and you're literally just, you're just crying, just sitting in this. And like, dude, I don't know. It's just crazy. And that's why I just want to avoid that essentially. But
it almost went back to the pain section, guys.
Yeah, I know. Almost. It's tempting. It's tempting, man. There's always temptations, dude. I'm telling you, you really got to be dialed in to avoid them. But overall, this was a really beautiful setup. Again, like purging this high here, taking out that liquidity. You had that shift in change in state right here. And the reason why it's a change in state, because if we're bullish, right, these bullish point of interest should continue to hold. And it did here. Look, it wicked back in. It went up. It failed at this high and slid through it. As soon as it slides through it and closes below on this candle, that validates the change in state. This right here validates the change in state. So as soon as that candle happens, you can look for just a retest of that level and take it from right there. So that's why that was the 1 hour setup. And then lower time frame fractal was this. But this is this was easily tradable, could have easily taken it. I was just expecting this to pop up a little bit more up into this level where I would have looked to just market execute it and take it down. But all good. I think we read that perfectly, Chris. Great job, brother.
Yes, it was good.
And already we're at 50 minutes. We have one more day left. Should we just rip through it?
Yes.
Okay, cool. Let's go to New York session. And look at that. Remember how I said on the daily candle, right? If this closes bearish, that validates the swing point. And that's exactly what happened. And then look at this one. In London, we get this wick up to come back up into 50% of this wick and comes back down to take out the daily low. That bread and butter setup, like that to me is already a trade, right? Like that would have been the bread and butter setup. So we probably missed it in New York, but if you're looking to continue on with the monthly trend, continuation down, we're looking at taking out swing lows on the daily. So I would look at this swing low here, right? Higher low to the left, lower low, higher low. So this is a swing. Low, lower low, higher low. This is a swing. So these are probably going to be the draws on liquidity, but we'll see if it manages it today on a Friday or if that was it. But
how many days left for the month? Close like 3, 4?
What is it? It's the 22nd. So no, there's still a good amount. We still have until next Friday, basically. So yeah, still a lot of opportunity.
I don't know why I saw like a 20.
No, all good. All good. But this one right here is a major level right here, right? This fair value gap. Again, it is exactly what we were talking about on the lower time frame, right? Where this is the flow, meaning this should hold if bullish. If this closes below on the 4 hour, we retest it. Well, guess what? We're targeting sell side liquidity. That's the flow. There's no other option in my opinion. So that's what I would like to see. Of course, I would like to have shorted up here, but that was a London play. And if we actually look at London, let's see what happened. Chris, explain this day to me, please, because this is just a textbook sell day in London.
Well, guys, this is just an example of the thing we were saying before, where you're just adamant in a level and it just ran. It was beautiful.
Exactly. But the 3 stages, right? The 3 stages. What do we have?
Accumulation, manipulation, and then distribution.
And then distribution. So what you'll typically see in this case, and like, again, this is perfect because this goes right up to that 1 hour level again. Remember that 1 hour order block tags it. That's the high of London session. Okay. You could actually use the range right here as a projection as to where price will get up to, right? And actually, if you use Asian range exactly with the inside the actual time, you'll get a better projection. But you could use bodies here. And you can see 1 standard deviation lines up perfectly with that level there. A little hard to see with that, but that's okay. And now you have the manipulation leg. So if I go to the 1 hour, you'll be able to see it better. Okay. The 1 hour, you have these last sequence of up candles. If I measure the last sequence of up candles, okay, just like that, and I use my range expansion down, I'm looking at a 1 standard deviation, a 2.5 standard deviation, or 2 to 2.5 standard deviation. So, you know, we still have time or area to run to. I wouldn't be surprised if this hits here and we get a retracement though down into this next area, which is perfectly in line with this level right there. So wouldn't be surprised to see that. But beautiful. I love these types of days, man. Like accumulation, manipulation, distribution right at the perfect time. So that means in New York, we should get a continuation play, right? Meaning retracement to OTE and then rip down. And OTE will probably be from this high. What was it? 8 o'clock? 8:30? Let's wait for 8:30.
This is something we want to see. We want to see price immediately going back up.
Yeah.
For Friday, there's not much time left.
Exactly. So it does immediately start up on the 1 hour, although we did take out this low. So again, I'm not too... I don't like it as much, but let's see. I wouldn't be surprised if it comes right back up into here. You see this? This was the level right here that swept liquidity, and we got this big run down from this level. So I wouldn't be surprised if it comes back up into that 50% like that. Order block / traffic right around here. This would be an OTE for continuation down. I wouldn't be surprised to see that. Again, I'm not going to take this one just because it's not... I don't like how it's coming up so aggressively after taking out those lows inside the higher time frame for value gap. But I would assume it's going to be something like this. Okay, so now that it hit that key level up here at the high, we shifted market structure right there. That's your look at last sequence of up candles. That takes out what? Liquidity right here. Okay, we break back down. Here's your fair value gap. That's in line with the OTE. There's your confirmation entry right there.
Right there.
Right there.
Yep.
Okay. So this one we could take. Chris, if you're down.
I'm down.
Let's just target a 2R.
Perfect.
Let's end it off. Let's end it off on a trade. Win or lose, doesn't matter. We're all good to go. Loss, just straight loss. But that's all good. It was a good opportunity in my opinion. Let's look at the 1 hour. Let's see where we're at. I guess the only issue was the fact that we did take out those previous day low into that fair value gap. However, again, based off the day, the continuation day, accumulation, manipulation, distribution, realistically, I'm content with that. That should have went on the continuation day, but is what it is.
It is what it is.
let's go fast forward, going up. So it had ended up having to actually take out the current daily high, and now that's probably it, right? We slid through the fair value gap here, slid through this breaker here, fair value gap. So yeah, this is probably going to go down from here now. Let's see. Yeah, just consolidation and everything today. All good. Classic Friday. So overall, we took a little winner. I think it was right here. Or where was it again, Chris? I can't remember.
I can't remember.
Oh, actually, perfect time to show off the closed positions tab. All we can do is just show it on the chart here, and we'll get to see. So, yep, we could see our position we entered right at this low. After that sweep, break back up, take out this high. So that was really good. And on this one, we entered right down here. And so now, again, we can look at our trades and look at what is the issue with this one relative to this one? Like, why was this one a winner? And like, you could see here that this is clear for me. And I know that this happens all the time, Chris. I know, like, with you as well, that when you purge sell side liquidity and then the buy side liquidity hasn't been taken yet, that's when the ones that typically work out the best, right? Whereas on this one, we had the buy side taken right here, and then we had sell side taken right here. And so we're in between this range, and then you can see how wicky it gets in here, right? So something to keep in mind, maybe I should have been a little bit more cognizant of that. And you know what? If this was a setup right here for New York before it took out this sell side liquidity, then that would have been the optimal trade entry to take down, as opposed to it coming back down into here, hitting into this fair value gap, and then coming back up. So a good thing to study. But overall, again, super content with the analysis. And sure, we didn't end up on a profit, but hey, it's all good. That's a part of the game.
All good. And just to point out something, now that you're saying that, just pay attention to the reaction after it takes a high or low. Because if you see our trade, it's in the middle of both, but you can also see a good reaction after it takes the lows and the highs.
Look at that. You're totally
which is
right.
Something we didn't get at all in our position.
Yep, exactly. So again, you're totally right, man, and that's a great point to get across, is that, look, we take these highs, we break that down, especially look at we're in a consolidative market, right? We're in a consolidative market, and because of that, you sell the highs and buy the lows. And you have to be cognizant of where you're at within the range. And we just kind of got a little lost into the range because I was so excited about the daily profile, the sell profile on the day, that I thought for sure it was just going to continue down, and not reacting to what actually happened, which was a 1 hour wick through this level. We reverted back into the range. What does that mean? That means it's likely going to go up, right? So, and that's what it does. It goes up to target the external liquidity right there. So anyways, a couple of great lessons, man. And I think we did a really good job with the analysis. It went back up to that weekly level, took out that high, then looking for shorts. It just consolidated a little bit more, probably waiting on the weekly, but overall.
You can even scroll back to the old positions.
Yep, exactly. So all the old positions will be on here, and you can see, I think that was the only one that we took, if I remember correctly. Yeah. That was the one trade that we took, and then we took another winner, but that was on FOMC, so that was reduced position size. And then this one was full 1% risk on the Friday. We lost, so we're 2% up. That's fine. We're just going to continue going and see what we could do. But I think that's basically it. Yeah, man. Yeah, thanks, Chris. Dude, I appreciate you again, as always, for being on and helping guide me as well on the trade setup. So it gives it the extra Chris confluence, gives the extra confidence to take it. But appreciate you, man.
What you guys will see is my extra layer of confusion sometimes. But I actually love to bring my point of views and perspective, because it shows the people also the side of a trader that is less experienced and the one that has double the amount of my experience. Because you being more experienced, you have more insights on the things I can neglect sometimes. And I really like that, because you can see the levels in the analysis that you can bring versus the one I'm bringing. And for the guys listening to us, one day I'll do a backtesting and chill alone. And you can also see and appreciate how I approach the market versus you. Like, it's just, you're just more knowledgeable in me. And I really like that for people to see it.
Yeah, and you know what though, is like sometimes what I've realized, or like that's been, I wouldn't say an issue, but I would say like it's almost because I've been in this space for so long and like have studied multiple strategies and whatever, that those things can kind of blind you as well, because you're not focusing on what truly matters. You have these like inherent biases based off of what you've learned and all this knowledge that you've consumed. Whereas that's why like sometimes you'll say things to me, or when we're trading live together, you're just like, oh, but what about this? And I'm like, damn, dude, I didn't even realize that, or like I didn't even think about that, because it's the most like objective, like simple solution or a simple thing that's likely to happen. But I'm thinking 10 steps ahead and this and that and this and that. And honestly, I think that's detrimental sometimes. So that's why I love trading with you, and it's always a pleasure, man. And it's always fun to do. So I hope that everyone listening can get some value out of the both of us, and also see, you know, where they read the market right versus us, or where they read it wrong, and learn and grow. And that's, again, the ultimate goal. So
yeah, I appreciate you.
Appreciate you as well, of course. Thank you guys so much for joining the ride, man. We'll catch you on the next episode. Hope you got some value out of this one. But yeah, that's it. Peace.
In the next one.
Yes, sir.